Shifting gears here, just briefly, the three ships left Ukrainian ports under the Black Sea grain export deal today in the second day of sailings after Russia suspended its participation. That's according to the initiative's United Nations-led coordination center. The bottleneck of ships waiting for Russian inspection easing now that it is out of the operation. But the big question is, will that boost in grain flow hold? Teucrium Funds President and CEO Sal Gilbertie joins us now. Sal, great to speak with you as always. First and foremost, just a huge view of what's going on there. What is the need to know about the situation?
Well, I think what people need to know is Russia pulling out actually, as you just mentioned, Brad, sped up deliveries. Yesterday, you had more ships and more grain on a tonnage basis leave Ukrainian ports than since the agreement started. So Russia was slowing things down, perhaps intentionally or not, but they were an impediment to grains flowing more freely. They are now flowing freely. You've got a lot of ships there trying to get out. They are loaded. You're going to see a burst of exports coming from Ukraine, which is much needed. Ukraine is well ahead of their corn export pace from last year, which is interesting. They're behind, but catching up on their wheat export pace. And you'll see a lot of ships leave there in the next several days. What moves forward is going to be tough. With Russia pulling out of the agreement, it runs a lot of risk. It's a wartime area. You will see insurance rates go up. You'll see shipping rates go up. You may see people avoiding sending their ships back into Ukraine to pick up more grain. That will be a problem. That said, Russia's got plenty of grain. You just have to go a little bit east in the Black Sea and you get to Russian ports and you can pick up all the grain you want, but there are payment problems there. People are afraid to get into the payment system with Russia. There's a big slowdown and people are afraid their money will be inadvertently frozen. So it's not illegal to buy grain or fertilizer from Russia, but people are afraid to do it. It's now their supplier of last choice, yet they are the world's largest holder of exportable supplies of both wheat and fertilizers.
So talk to us now on balance, and hi, by the way, on balance, what does the supply-demand equation look like as we go in, and particularly the supply, look like as we go into the winter here? It sounds like still relatively well supplied, even with these threats from Russia.
That's right. We are well supplied, but understand the global balance sheets are tightening. I think we've said this before, and we've got confirmation from the USDA in their October report that this will be another year where the world produces a record amount of wheat, yet we also will use more than we produce. So, if you let that sink in, producing a record amount, yet it's not enough. That means global balance sheets over time are tightening. And the big issue for wheat is that if wheat backs up in Ukraine, if ships don't go back in there because we're in a wartime environment and Russia's pulled out of the deal, there's too much uncertainty now for ship owners and traders to go back in there. If we're in a wartime environment and people aren't buying from Ukraine or from Russia for that matter, if they're the sources of last resort, which they will be because of the risks involved in sending ships into the Black Sea, what you're going to do is back up supplies that are sitting there, and you can only hold wheat for so long. It'll go bad. Farmers have already planted this year's crop. They plant in the fall, this winter wheat. Apparently, Ukraine has planted 40% less. Russia probably has another record planting. But if we don't pull the wheat out of there in the next, say, 6 months to 9 months, next year, when they go to plant, they may not plant as much. And with the global balance sheet tightening, to have reduced wheat plantings is going to be a major problem moving forward next year to 2 or 3.
Sal, given this environment, what's the read-through to consumer prices?
I think that, again, we've spoken about this before. Energy has a bigger effect on your box of cereal, say, than does the actual price of the grain. But I think in terms of overall consumer prices, you've got a floor on the wholesale price of grain. The cost of production is higher. And right now, there's too much uncertainty in the world and too much of a tightening balance sheet for grains to go back to their old levels that we saw, say, 2 years ago, where we were at cost of production. You've got an underlying floor on grains. And China appears to be short food. They're importing, they're buying, they're selling wheat out of their stocks, and sometimes they only sell a certain percentage. They sold 100% of that wheat this week that they offered. China may be locking their people down because of commodity, particularly food shortages in different areas. It could be a problem. So between China and the supply issues and risk issues in the Black Sea and China's demand, global supplies of grain are going to continue to tighten in the future here.